Well, a day of consolidation, that's how you would describe it, with an upward bias for sure. So we're clinging on to that 25,150 level, at least on the Nifty futures, as we begin this edition of Closing Trades right here on ET Now. So pretty steady. Not really seen any big move, so to speak, but largely we've been ambling around in a 3/10 to about a 0.5% gain kind of mark. It's financials all the way, really, and within financials, you're now seeing a churn happen. Look at Geo Financials, 3% higher right now. Kotak Bank is holding higher by 3%. If you thought the rally on Bajaj Finance was done with on Friday, another 2.5% up in the green is where Bajaj Finance is today. Axis also holding out well. And the kind of ramifications that you've seen of the bazooka from the RBI, auto stocks, and one is only wondering, had it not been for the rare earth magnets issue, perhaps the rally could have been even more meaningful. But having said that, with that big overhang also, you are seeing pretty much on a daily basis, most of the auto plays actually hold out. And today, it's Hero MotoCorp, which is scaling higher by about almost 2%. That said, the churn in the market is also at play. Some of the underperforming sectors like IT also are making a meaningful comeback. So TCS, Wipro, all these names are holding out very smartly. But the breadth of the market is extremely lively. Be it an IIFL, which is holding up 7.25% right now. Bandhan Bank, which is also higher, up by over 7%. MCX higher by 6.5%. MGL up nearly 6%. Or for that matter, some of the smaller banks like an RBL as well, which are also catching up to the announcement from the RBI. 5.5% is the uptick that these stocks also are sitting on. There are the set of losers also today, but one can easily skip that given the positive momentum and mood, more importantly, in the market after the RBI's move. But Snehi, what about the newsmakers?
Well, absolutely. The biggest newsmakers belong to the Financials Pact, and that group of stocks has been in focus today. So let's talk about the NBFCs that have been up in a buzz and continuing gains from Friday. You have names like Muthoot Finance, Muthoot Microfinance, and some other microfinance and gold loan financiers. Lots of big news coming in from the RBI, and that's provided a fillip to these stocks. These stocks are both doing very well today as well. Muthoot Finance up almost 4%. Muthoot Microfinance trading with gains of more than 5% on the back of the RBI revision coming in for qualifying assets criteria for the NBFCs and microfinance companies. Now this qualifying asset is set to be at minimum 60% of the total asset value compared to 75%. Very big positive coming in for microfinanciers. And these gold loan financiers are in focus because for loans between 2.5 to 5 lakh, the LTV has been capped to 80%, but it has been cut for gold loans below 2.5%. So big moves coming in on both of these gold loan financiers as well. But moving away from that, Hindustan Zinc was another stock that was in focus today. We interacted with the management earlier in the day, wherein they said that they believe silver prices will keep on increasing and they plan to double the silver production in the next 4 to 5 years. Now, for a company that derives 20% of its revenue from silver, that is very positive news coming in. That stock also over 4.5% gains right now is what that stock is seeing. And MCX, like Ayesha mentioned, they're all set to launch their electricity derivatives. They've received the SEBI approval for the same as well. So MCX also positive news flow coming in. A 6.5% uptick is what we've seen on that stock as well. Other than that, a couple of other newsmakers that have done well today on the back of order wins. Railtel is one such stock. Kalpataru Projects, that stock was soaring away in today's trading session. And other than that, some of these QSR names have done well. Capri Global is another stock from the lending space. That's up 16% today. So very big moves coming in from the entire financial space. But well, yes, like Ayesha mentioned, the overall breadth of the market is also quite steady today. But well, while we are talking about the overall breadth, let's bring on board Kunal Botra, who's joining us in the studio. And Kunal, the kind of day we've had, we've been able to hold on to the gains that we've seen from the get-go. This is largely a day that we were anticipating. Similarly, while we were speaking in the morning about these financiers, we had expected a strong move. But something like a Capri Global is up 15 or 16%. What are you making of these moves?
Yeah, so it starts off with confidence brewing into the sector, large cap names starting to look attractive, and then I think the move starts to trickle into a lot many other so-called underperforming sectors are the ones which have been lagging a little behind. So I think it doesn't come as a surprise that many of the other stocks would start to participate. So we are looking at a point where the markets would start to look a lot more attractive on a broad term basis, because we should be looking at a point where the market breadth would start to open up significantly. Many underperformers which are reeling below their longer term averages, these stocks would make a comeback. we are also at a point where many of these stocks are just 5%, 6% away from a lifetime high, breakout for themselves, whether it's on the financials, whether it's on the banking names, or whether it's on many individual sectors. Even the Nifty is, I think, just about some 1,000 odd points away from its lifetime high level. So which means that we are looking at a point where every 100, 200, 300 points move on the index should add on to the list of sectors and stocks which would start to look a lot more attractive. So what happens is initially when the move starts off like a first 500 to 1,000 point move on the index was dominated or predominated more by large cap names outperforming, and then once the market gets back into that zone of confidence where the news flow starts to become more in line with the market mood, that's where you see the mid caps and small caps outperforming significantly. So I think we are likely to go into that stage, or we've entered into that stage where the mid caps and the market bets should start to open up quite positively.
Okay. And Kunal, the intriguing part about the market, like we were anticipating in the morning, that the underperformers are now also catching up to the market rally. Case in point being IT. How sustainable is this move looking to you?
I strongly believe that it's very sustainable. I think there should be more up moves on the IT stocks going forward, because now I think we are at a point where this is the only sector which has been lagging behind. So we did a very simple ratio analysis for the Nifty IT sector with respect to other performing sectors, and there seems to be a point where it looks like that many of these ratios are coming back into the deep oversold or overbought territories, depending on what you're looking at. So I think in that context, we are looking at a point where the IT stocks are at an extreme, and it's a matter of time that these stocks will also try and pick up pace from here on. So I think it's a good time to start allocating money back to the IT stocks. You look at it this way also, that many of these US dominated sectors, the Nasdaq, S&P, etc., these indices are also heading towards a breakout after 3-6 months of a price consolidation correction for themselves. So that should also act as a boosting factor to the entire IT index.
Well, we've been talking about the RBI trickle effect into not just the rate sensitives, but look at what's happening in the MFI space, in the gold financiers as well. That's where the real meaningful story is also playing out, given that those announcements came by only over the weekend. In fact, we were chatting with the management as well of Muthoot Finance just earlier today, trying to anticipate and analyze what could be the impact on the business because of all the announcements that came by from the RBI. I don't know if we can play that soundbite up for you, but Kunal, how's the chart reading for Muthoot and Manappuram?
So I think very attractive even at current levels, and I think after that strong up move which these stocks had shown on Friday, there was, I think, like a 7% to 8% kind of a jump for many of these stocks. Now, to get a follow through in a very similar kind of a context where these stocks open with a gap up and then start to move up higher right from the word go, I think it just about indicates that the market mood is extremely optimistic, possible much more strong upside is what we can expect into the stock price. Now, interestingly, that we need to watch out for the indicators to come back into an overbought territory. That could probably be an a trigger where these stocks may go into a mild correction, but that should be taken as an entry point in case if these stocks come back into slight overbought territories on the short-term charts.
In fact, here's exactly what we questioned Muthoot Finance management as well, and they're seeing a huge opportunity in gold loans amid the growing demand. Here's a word coming in from George Alexander Muthoot, who added that they are unlikely to see intensifying competition from banks.
More and more people are coming forward to pledge their gold and take loans. So it is not that competition. Everybody in the last 1 year, banks have also increased their portfolio by 50%. We have increased our portfolio by 40%. So everybody is growing. The market is really expanding. It is a market which is expanding. So more and more people, players coming into this, especially the banks, is only expanding the market. To maintain the health of the NBFCs, I think increasing the non-microfinance percentage from 25 to 40% is certainly in the right direction. They can think of giving some more little better loans or even some secured loans in this 40% so that the blend of risk is reduced. I'm sure after two quarters things should stabilize, and the 40% non-MFI is definitely a step in the right direction, which will improve the health and the health of the microfinance NBFCs.
That's the word coming in from the management at Muthoot Finance. But let's understand what's driving this kind of surge in stock price that we've seen for these gold loan financiers as well as other NBFCs in today's trade. And this is on the back of a significant regulatory shift wherein the RBI has revised the qualifying asset criteria for NBFC MFIs by lowering the minimum requirement for qualifying assets from 75% earlier to 60% now of the total assets net of intangible assets on an ongoing basis. Now, what does this mean for NBFCs? Varun is here to break all of that down for us. Varun.
Well, definitely it's a good step by RBI because the RBI has actually revised the qualifying assets criteria for NBFCs and microfinance. And this has been actually reduced from 75% earlier to 60% now. And under the updated framework, the qualifying assets are basically defined as collateral-free loans extended to households with an annual income of up to 3 lakhs. And any NBFC or microfinance breaching the norms for 4 quarters must submit a remediation plan to RBI within 4 months. That is what the guideline says. Now, how will this help the overall MFI sector? Now, this move will actually help the microfinance sector to diversify and expand into other assets and also improve the overall financial position of the microfinance sector. It will help improving fund availability to the microfinance sector and will also ensure balance sheet stability. This move will also position the MFI sector for better positioning for cross cycles earnings as well. If you remember, during the RBI press conference, the RBI has said that the overall stress in the personal loan and credit card segment has abated, but the stress in microfinance sector is still there, and this move will actually reduce the overall stress in the microfinance sector to some extent because the qualifying assets, the criteria has been reduced from 75% to 60%. So this is a welcome step by RBI on the microfinance sector.
Okay, which is why you're seeing the entire MFI space as well a buzz. But let's move on and let's talk about what's going to happen to the markets now. We've got Karthik Kumar, fund manager at Axis Mutual Fund, joining in on the show right now. Karthik, hi, good afternoon. Welcome to ET Now. You know, we were just debating this morning as to how picture perfect the setup is looking like. Everything from low inflation to now lower EMIs, lower interest rates on all kinds of loans, lower taxes, good monsoon. Everything seems to be, you know, playing out pretty nicely. Where do you think the trickle-down effect of all of this is going to, you know, be visible? Karthik, if you could just unmute yourself.
Sorry, I was on mute. What I meant is the trickle-down effect we will see a few months down the line, because what we've seen is as we gone through the earnings seasons, our earnings is still being cut on the margins. For the reasons that you mentioned, I think down the chain around 4 to 6 months, we will start seeing earnings revisions, negative revisions kind of stop. And from there on, earnings outlook should get better. And that is when I think the markets will start trending upwards as well, or more likely to start trending upwards then.
Karthik, there was, I mean, not just myth, but data actually backing that mutual funds were still not all in the market and they still had high cash levels from April end onwards. What about now? How much cash levels are you sitting on in your schemes?
From our own perspective, we are sitting on very limited level of cash. We have not taken outright bearish view across in terms of just the cash levels. So we haven't taken a massive cash call there. So we do have cash to deploy, but it is not out of whack. But having said that, the backdrop is quite positive, be it both in terms of domestic inflow or even FI inflow. So domestic, as you said, the cash numbers are higher at the industry level, so that is a positive. And even on the FII front, FIs have turned positive. Also, the macros for FI, be it in terms of interest rates, in terms of expected policy path for interest rates, especially in the US, the dollar weakness, and the fact that FIs are still underweight our own markets to some extent, all of these things are positive from a flow perspective, be it whether you look at it on a DII or from an FI standpoint.
Right, Karthik, I want to understand that amid a market setup like this, where have you placed your overweight and underweight bets? What is your sector positioning looking like at the moment?
Okay. So from a style perspective, I think the markets have, especially given the policy uncertainty emanating from US with regards to imports and so on and so forth, markets have taken a skeptical view of growth as a style in general, and in fact they've taken shelter under value and some quality names over the last quality as a style over the last few months. And I think that is likely to change going forward because, especially in an environment where our earnings continue to be cut on the margins, growth as a style, earnings revision as a style will continue to be, I think, will come back to the fore. So that's from a style perspective. From a sector perspective, I continue to remain overweight pharma because it's while the sector has underperformed, I think for the year so far, as we get more certainty with regards to the policy developments, especially in US, I think the earnings is there, so I think that sector could recover. The other is we like financials overall. There are different buckets within financials, be it financials, NBFs, private banks, NBFCs, or even some of the capital marketplace. I think it's a good mix of different styles that you want to get into. Those are largely our top sectors that we are bullish on. In terms of areas where we are kind of light on is largely consumers. Within consumers, the earnings has been tepid. And if you look at FMCG consumer staple names, so far the earnings revisions have also been slightly negative. So when things change around for the reasons we discussed, including good lower inflation numbers, earlier than expected monsoons, the tax effect kind of trickling down, we do expect earnings pathway to kind of improve down the chain, and that's when we'll be happy to look at consumers again.
Interesting. But Karthik, do you not believe that all the factors that we just talked about, that surely is going to propel consumption? I mean, if that doesn't, I don't know what else will.
Absolutely. I couldn't agree with you more there. Yeah.
Okay. So in anticipation, you wouldn't turn bullish, right?
So as of now, the data is still yet to come in. So as of now, we continue to be in a wait and watch mode, both in terms of the earnings and also in terms of valuations. But I think there are signs there, and if we'll keep an eye out for it, and as things start playing out on ground, is when we will kind of reevaluate there. But as of now, as things stands right now, we still continue to remain a bit light on consumer FMCG plays there.
Kunal, what's a better contra call right now? FMCG, staples that is, or IT?
IT. So on IT, we continue to remain kind of neutralish to slightly underweight, because with IT, what we are looking at is more name specific, and also the sector has underperformed over the year so far, and valuations are kind of reasonable. So when we get clarity with regards to the macro environment in developed markets, and especially in the US, and policy certainty, I think IT selective names in IT could benefit out of that. So we are kind of neutral to underweight depending on the fund that one is looking at. But consumers, yes, we are underweight as we stand as we evaluate markets right now.
What's your sense on the charts? IT or FMCG?
IT. I think there's a strong chance that IT should make a comeback for itself. Momentum is coming back into the individual IT stocks. It's not the case with many of these other FMCG names. So I think looking at the way the setup is for many individual stocks on the large cap, mid cap IT names, there seems to be a very strong indicator that we are looking at a potential much more stronger breakout. And by the breakout, I would probably mean that not just a 200, 500 pointer move on the IT index. We could be looking at a point where the IT index could rally by at least another 5 to 10% swing from current levels. So at 37,500 where we are, we could be looking at a point where the IT index may come back about the 40,000 mark as well.
Okay, so that's the take on IT versus FMCG. Kunal placing his bets on IT. But Karthik, coming back to you once again, how are you placed when it comes to autos and metals? Because both of them have significant overhangs coming in from the rare earth mineral issue and that magnet issue that's acting as a major headwind right now. So how are you positioning your portfolio when it comes to both of these sectors, autos and metals?
Okay. Metals, in terms of metals, it's not a view on sectors. We may have selective exposure to metal names per se, but it is on a stock level basis, bottom up basis, rather than a top down perspective. The same with autos to some extent, where we do have exposure to the leaders within the auto space, be it on the four-wheeler side or on the two-wheeler side, where there is still growth visibility despite a general slowdown in both these areas. We still continue to stick to our winners there. So it's a lot more selective within both these areas. As far as the policy as far as the issue that you mentioned, that's something that needs to be monitored on an ongoing basis. But right now, we are positioned with the leaders in both, be it in the four-wheeler or the two-wheeler space.
Okay, and I'm just going through the website right now, Karthik, and I can't help but notice ICICI Bank is a stock that you're rather bullish on. If you have to play the entire large private banking space in the pecking order of, let's say, HDFC, ICICI, Axis, Kotak, how would you be rating these four banks and what would your weightage be?
From a compliance perspective, I wouldn't be able to comment on single names.
Okay.
But I think given what RBI has done over the last week, I think the entire the lot of the overhang around banks kind of goes away. And in that context, when you look at valuations as well, private banks look quite decent there. And with this overhang away, I think the whole basket as a whole looks good. And as I said, financials, within the larger financial space, there are different kind of opportunities. If you look at NBFCs, or one looks at capital market plays as well, where there is growth, it is slightly higher valuation, but there is growth there. With banks, you get more solid, kind of predictable growth at reasonable valuations. So depending on what fits your bucket, you have different opportunities within financials as a sector right now.
Right, okay. Just looking at some of the other names right now in the market, and clearly it's the capital market theme which is once again propping up, and there too you are seeing that churn play out all through last week, or in fact, that's really been the story for the last 6 months. It's always been sort of BSE, CDSL, they've been the go-to names, and now look at IIFL, for instance. Of course, it's that gold financing angle as well, which is at play. That's holding up a solid 7.25% right now. MCX looking strong. That strong stock is holding up almost 6.5% as we speak. And the smaller banks are, where the traction is. Bandhan Bank up 7.25%, RBL up 5.5%. So MFIs, smaller banks, like Karthik was saying, it's clearly financials, which is the go-to space. But Karthik, within the capital market theme, what is it that you think provides value still?
I think it's not a case of value there. To be fair, the valuations are slightly on the higher side across that space. But having said that, there is a lot of growth visibility, and given what has happened from a macro perspective, and as we also talked about, be it in terms of markets having a lot of possible tailwinds in terms of flows from domestics, FIIs. So I think a whole range of players, be it AMCs or be it companies that benefit from uptick in volumes or IPOs in the capital market space, all can benefit across that space. So I think while valuations can be a bit stretched there, but growth visibility is quite good. So one needs to be selective within that space, but it does present opportunities.
Karthik, just want to come back to the consumption theme, and if you put away core FMCG for a bit and talk about the other baskets like retail or your non-FMCG consumption, it's not, or for that instance QSR, it's not been all that bad when you take a look at consumption, barring the main FMCG counters. Would you still be underweight on the entire theme of consumption if you are barring FMCG, the likes of retail, QSR, or significant pockets or something that, or selective pockets, pardon me, something that you're liking?
So within consumers, aside from FMCG, of course, where we discussed our views, we are selectively overweight in terms of, let's say, travel and tourism. That's one area that we are kind of bullish on. In terms of modern commerce, is something. Modern retail is an area, depending on the company, of course. That's another area that we are selectively bullish on. But these are more bottom-up plays. Travel and tourism, you can probably count as one of the areas where we still continue to remain bullish or positioned well across that space.
Okay, and before we let you go, just want to get your view on this entire thermal, solar, renewable energy theme that we're seeing lately. All of these power stocks have once again started seeing some upward momentum. Are you placing that theme anywhere in your portfolio? What's the stance there?
So we are kind of neutral on that space. We do have exposure there selectively. Again, it comes to the kind of funds that we are talking about. But within the funds that I manage, which is mostly from a quantitative perspective, I have little exposure or limited exposure to that space.
Okay, Karthik, thanks so much for joining us. On that note, we'll let you go. Our last about 30 minutes left of trade right now. Markets are looking steady. We're below the 25,100 mark, but nonetheless, a 0.4% of an uptick is what we're seeing for the Nifty. Sensex has also tilted slightly lower from the day's high. A 0.3% uptick is what we're seeing, and Sensex is now below that 82,500 mark and slipping below 82,400 as we speak. India Wix has cooled off from the day's high. Nifty Bank is also significantly cooled off from the day's high, but nonetheless, a 0.5% uptick is something that we're still seeing on Nifty Bank, so at least that is looking resilient for now. We'll slip into a short break and be right back on the other side.
Back with closing trades right here on ET now. Yes, we're seeing some profit taking, but nothing alarming really, because we're still holding on to those 25,100 levels in trade. Just want to check in on what the global market setup is like. Europe surely has started off quite weak. In fact, you've got the DAX scaling lower by nearly about 100 points, flat with a negative bias for the other indexes. What about the pre-market US data? Because it's the inflation data which is on deck in the week ahead. Nasdaq futures flat, S&P flat, although S&P did make it to that all-time peak of 6,000. That's where it's still trailing, and not a meaningful move really coming in on the Dow futures either. They're also lying pretty quiet in trade. But we've got Aditya Agarwal as well joining in on the show right now to talk about what he's making of the market. Aditya, hi, afternoon. Good going. Not really seeing as material a follow through in the market as we did on Friday, but what's your sense on the charts now?
Hi, good afternoon. Thanks for having me on the show. Oh, it's more of a consolidation, I think. Nothing too much to read in it. What is interesting is the advanced decline remains healthy. The market breadth remains healthy. And if you take a look at the mid cap and the small cap end of the market, that continues to do well. So my sense is this kind of a consolidation day that we are witnessing on the Nifty and the Bank Nifty, I will take that in the stride, even if I see probably a 100 point, 150 point correction on the Nifty and maybe a 200, 300 point correction on the Bank Nifty. That will be an opportunity to go fresh long in the markets, because my sense is this move that we had seen in Friday's trading session is something which is very encouraging. What is also comforting is the VIX comfortably trading below the level of 16, which I've been talking about for some time now. So till the time the VIX remains below the level of 16, I think a market will inch higher from here on. On the Nifty for this week, I think it can somewhere test levels of 25,500 on the upside. And for the Bank Nifty, I think somewhere between 57,200 to about 57,500 is where the Bank Nifty too can test the levels. And in between that, there are a lot of sectors and stocks which are buzzing, and my sense is that will continue to happen throughout the week.
Afternoon. Now, we've seen a lot of sector churn, sector rotation. You have certain stocks that are buzzing on different days. The trend is changing, but the one trend that has stayed common over the course of the last couple of weeks is the outperformance of the broader markets on the benchmarks. Today also that seems to be, or rather that is the case. What's your outlook going ahead? Do you believe that there could be a point where the benchmarks could take over the broader markets because of the kind of exuberance that we've seen in the mid cap and the small cap end already?
Not really, Sneh. I think it's still time for the broader markets to outperform from here on. Because if we clearly take a look at the texture of the market, it started off with the large caps rallying first, and then the Nifty and the Bank Nifty moving closer to their all-time highs. Now it's the broader markets which are chipping in and putting in that kind of an effort for a rally. In the last 3 months is where we are seeing the mid cap and the small cap end of the market outperforming. And I think it's still time for the Nifty and the Bank Nifty to actually start to outperform. Still, if you take a look at the portfolio level, a lot of stocks in individual stock portfolio would be down significantly. They are making a comeback, they're making a recovery. Utilities are making a recovery, they're making a comeback. Defense as a theme has played out well. Railways are now outperforming. the rest of the sector. So my sense is slowly and gradually all these sectors which had underperformed big time, IT is coming back, metals are coming back. So all these sectors which had underperformed recently will start to outperform now. And for those reasons, I think broader markets will continue to outperform before you see Nifty and the Bank Nifty actually scaling past their new highs.
Okay, so that's the take on a lot of sectors that have not been performing recently, but it's looking optimistic on that front to Aditya. Let's also welcome Amnish Agarwal, Head of Research at Prabhudas Lilladher on board. And Amnish, hi, good afternoon. Thanks for joining us. Like Aditya was just mentioning, we're seeing some sheen coming back in sectors that have not been performing off late, but now it seems to be better. On the back of this, do you believe that we're now headed for a couple of weeks of only positivity on the charts? Do you believe that this up move that we've just begun to see is looking steady or sustainable?
Okay, hi. You see, if you look at, say, the backdrop of past few weeks, I think things have been moving in the positive direction. Whether it is the government data, whether this is news regarding monsoons, and now the interest rate cut has by RBI has been better than what the markets anticipated. Now there is some set of momentum which has now got into the market. And of course, the 4Q numbers were better than what the markets were expecting. Now that is actually, if you look at, say, particularly from the beginning of April till now, the markets would have rallied by roughly around, say, high single digits, not double digits, at the index level. So I think the momentum is positive, but there could be, say, hiccups as we go along. All the sectors or the stocks might not go the same way. We always boils down to what the numbers could be, how the things eventually could be looking at, which sectors will gain, and how the monsoon also progresses. Because the monsoon started 2 weeks or say 10 days before anticipation. But last week or 10 days has been, you can say, slightly on the weaker side. So I would say that the medium term, I will not go into what can happen for the next 1 week or 2 weeks. The medium term outlook remains positive based on all the given parameters, which can take the markets higher as we move along. But intermittently, some profit booking will continue to come in the markets.
Amnish, appreciate that point. But while we were talking about monsoon, I just want to get a further view on that point. Given there are some sectors that stand to gain from monsoon, like consumption, on the flip side, you have sectors that stand to lose or taper down rather from the monsoons, the likes of cement, infra, real estate. What is your view on these sectors, and where do you believe the next big theme could emerge?
You see, if you look at, say, cement or infra or something, you see, monsoon is not something which is coming for this first time. It is an yearly phenomenon. And last time also we had pretty much decent monsoon. So to say that this year's monsoon is going to impact cement demand, it happened even in the base year. Now, when it comes to consumption, also I would say the correlation of monsoon to the overall consumer demand that has diminished over the years. And it is now a well-known fact that even in the years we don't have very good monsoons, it is not that your FMCG or the consumer volumes tend to decline in a very meaningful way. So to that extent, while it is positive and in a backdrop where last year also rural India did reasonably well and better than urban India, I think monsoons are positive from the viewpoint of overall agricultural productivity, availability of goods, inflation, etc. But will it drastically alter the overall consumption demand in the country? I don't think so.
Well, two stocks which are holding a buzz, at least one for sure, has been Subros, the other one Tata Motors. They've rolled out their new series of heavy trucks fitted with AC driver cabins as well, and this is a bit to enhance driver safety and reduce fatigue as well. Remember, the government had made it mandatory to have AC cabins for all new medium and heavy trucks as well. Samir Dikshit, my colleague, is here with more on this announcement, which came into effect as of yesterday.
An important development in the auto space. In a move to enhance road safety, The government has now mandated that the new trucks in the N2 and N3 category, which will be rolled out on the roads from 8th of June 2025, it will mandatorily have AC compartments for the drivers. So the notification which was issued in 2023 December, it clearly mentioned that the truck driver's cabin has to be mandatory. It has to be AC compartment. Earlier, the date was 1st of October 2025. Later on, it was revised to 18 months. And now it will come into effect from 8th of June 2025. And in the same direction, Tata Motors, they have rolled out their latest series of truck, which comes with mandatorily AC compartment for the drivers. So the government understands that this AC compartment is not a luxury item. Basically, it is a necessity that will help to provide better working environment to the drivers. This will help to reduce the fatigue of a driver, especially when they are running on longer routes. And this will also help to reduce road fatalities, to reduce the road accident. Whereas from the truck manufacturer side, they have two reservations. The first one is that this will definitely increase the production cost by roughly around 2.5%. Not just this, the average running cost will also be impacted by around 2 to 5%. But the government and the truck manufacturers, they have came to a common consensus that these are short-term impact that could be mitigated. But if you see a larger goal or a long-term goal, that this move will definitely help not just the truck manufacturers, but this will also help to improve the road safety, reduce the road fatalities. And the move now comes into effect from 8th of June 2025, that the driver's cabin is going to have AC compartment, and this will improve their working environment.
Okay, Samir, thanks for all of those details. Subaru is a stock that's been doing well right now, also trading with gains of almost 4%. Kunal, want to get a sense on these commercial vehicle players in the market, because if you take a look at the recent auto sales numbers for May, Tata Motors CV was below expectations, but M&M, Auto, Farm, they've all done very well. So give us a chart check on Tata Motors and M&M. Tata Motors is an emerging one now from previous lows. M&M is continuing its trajectory. Which one is shaping up to be more promising?
See, I think, of course, M&M seems to be something which is more consistent, when you look at this over the last 3 months, 6 months, and the last 1 year of price performance, because the way the stock has managed to absorb a major part of the market correction, which was specifically seen in the second half of 2024. There was a point where many of these auto stocks had fallen by 40-50%, four-wheelers as well as two-wheelers. And I think, with the way M&M has made a comeback post that, it just about, indicates that the stock has been a lot more consistent and strong on the charts. But then I think we are also seeing a point where the negative seems to be have priced in quite completely for many of the stocks like Tata Motors, for example. That stock has stopped falling when you look at this over the last 2-3 weeks. Yes, the stock has not participated on the upside, but I think it could just be a matter of time that names like Tata Motors and maybe the likes of Bajaj Auto, Hero MotoCorp, which have been 3 major underperformers from the auto pack, these stocks should also make a comeback for themselves. So I think if one has to take a trade over here, you will have to balance it out. Maybe I think you'll have to look at one end of the market from the auto pack, where you see the outperformers, the likes of M&M, Eicher Motors, etc., where you can look to bet in at current levels. But then there also has to be a point where you will start to look at underperformers, and that the fact that they will strongly play a catch up pretty soon. So the likes of Tata Motors, maybe a Bajaj Auto and Hero MotoCorp could also be good bets.
Right, that's of course one way of playing that, but it could also be via the financial pack, be it home finance or for that matter, even some of the auto financiers. Other than that, today of course ICICI Bank, is lying low. It's down about almost 1.5%. M&M, Bharti, all the leadership names are the ones which are consolidating a little bit. And then Eternal, there has been a lot of news flow around it. So you are seeing a little bit of a dip of about almost 2% play out over there. ITC, relative underperformer, it's up just marginally, and that's pretty much the case with Reliance as well. Unilever, Cipla, Ultratech Cement, Asian Paints, these are some of the other names which are also lying pretty quiet in trade right now. Other than that, of course, there are a whole set of newsmakers. MCX, for instance, they've received that approval from SEBI to launch electricity derivatives now. Amnish, just wanted to get your sense in on stories like MCX, IEX, etc.
You see, India is basically a power deficient country in the past, and it is one of the fastest growing markets. Today, the power demand is growing anywhere between mid to high single digits. And so there's a requirement to evacuate electricity from one region to another. There's a requirement for power trading. So I think the platforms like these, I think they offer a lot of scope as far as you're generating revenues, doing futures and all is concerned. The only thing is these are highly regulated segments. Now, whether it is MCX or then we used to have say Indian Energy Exchange earlier. So a lot depends on how the regulations are and how much flexibility they provide to the exchange. Now, given the fact that they get a reasonable level of flexibility to operate, then definitely it will add another, you can say, line of revenue to the overall scenario. But how it actually pans out remains to be seen, because power, your futures and all these things are not like some of the other commodities where the fluctuations could be say day to day, month on month, because here you are having specific months or periods during which the electricity shortages happen. How the various players, you can say, tackle this, only I think we will learn over a period of time, but directionally, definitely, it is positive for MCX.
That's the take on MCX and IEX. But Amnish, I want to get your sense on everything that's been happening in the quick commerce, quick food delivery space as well. Lots of news flow over there as well, starting last week, where we understand that Zepto has postponed its IPO to the next financial year. You have today news coming in on Blinkit, where an FTA has shut one of their Pune dark stores. Similar story for Zepto that happened last week as well. You also have a Rapido that has slashed its delivery fees in order to look more attractive in terms of competition. Where do you think this space is headed, given every time we think this is at as much as the competition could get, it only gets worse? So what's your view here?
You see, if you look at this entire food delivery as well as quick commerce space, I think this is a very fast evolving space. So this is not like other consumption segments where one leader is set and now you will continue to do well for the next 5 years, 10 years. Because, for example, you look at say food delivery. Food delivery over the last close to say 8 to 10 years has got significantly consolidated now. So there were practically two players, Swiggy and Zomato. And then you become profitable with low to mid single digit kind of margins you were earning. But then in all these things, your technology stack and there are, I would say, the overall fixed overheads are not to that extent. And once you become profitable, you then start, you can say, attracting more competition. Now, similarly, you look at, say, a space like quick commerce, very fast evolving, high growth, and the industry estimates suggest that over the next, say, 3-4 years, it might be 5 to 6 times the size. So pretty much everyone is expanding. You look at whether it is your Blinkit, your Swiggy, Instamart, Big Basket, Flipkart Minutes has come in, Amazon. So practically, you look at every player has got the plans to double the number of stores, make it 3 times over the next 2 years, 3 years. So it's a very fast evolving space. And now when you grow that fast, so there are likely to be, you can say, problems. And it happens with every industry, where when you are in a very, very high growth phase, there could be some casualties on the way. You might select some wrong location. There might be, you can say, some operational issues. So these things will, I would say, continue to crop up, and these are and this industry is no different. It happens everywhere. But having said that, the next few quarters are going to be extremely, extremely challenging in terms of profitability. Because when you have got earlier, say, a two-player market, and suddenly you realize that 2 to 3 players earlier, now maybe 6 players, now it's high growth. So the growth will be visible in terms of top line and all. But I don't rule out that for the next 2-3 quarters at least, we would see some pressure on margin for all these players before the things start getting settled, the expenses come into control, and then we will see the trajectory moving up again. And this is very well reflected in the, you can say, the profit margins and the other commentary of all the leading players in the previous quarter.
Okay, that's the take coming in on both Eternal as well as Swiggy right now. But just looking at the charts of both of those companies, because Eternal, of course, is down about almost 2% as we speak right now. But Aditya, what's your strength, whether this weakness on Eternal, or for that matter, even a Swiggy, is going to continue for some time?
I think Aisha is an opportunity to go long in this space. I think, and especially I would stick my neck out and put some more money in Swiggy as compared to Eternal. Clearly, because of the fact that it has corrected significantly, offers an excellent risk to reward. A good consolidation has taken place in Swiggy. At current levels, if I'm a buyer, I'll place a stop loss somewhere around 340 or slightly below 340, and look for a target of somewhere around 460 to about 470 on the upside. So that's the kind of risk to reward that I'm seeing in Swiggy. If I talk about Eternal, I think. The upside is a little capped now, given the fact that the stock has already rallied from 200 odd levels to 257. On the upside, I think 280, 290 is somewhere where the upside is capped for Eternal. So at current levels, I'll be a buyer in Swiggy. If you already own Eternal, continue to hold. There's no weakness in the stock per se, but I have to deploy fresh money in this space. Probably Swiggy is one that space that I'll deploy my money on.
That's the take on the entire quick commerce space. And Aditya sticking his neck out for Swiggy, despite that stock seeing a very recent run-up, stellar run-up over the course of last week. But on that note, let's get in some BTST ideas. And Kunal, where are you placing your bets today? What's looking good for tomorrow?
So from a BTST perspective, I'll go for two buy calls. The first is one Bank of India. That's a chart which is looking attractive, or a target of 135, stop loss at 126. And Praj Industries, and after I think almost weeks of the stock being an underperformer, today we've seen one of the best volumes for the stock in the last many months. So that could probably be a precursor of the stock starting to move up higher. So betting on Praj Industries at current levels, targets of 555, stop loss at 520.
Okay, so significant news flow on both of those technical bets that Kunal has made, so looking good overall. But Aditya, what about you? What are your picks today?
The first one is from the metal space. I think this is now seeing some kind of an upside momentum, and this momentum is likely to continue. So Jindal Steel is on my buying list, broken out from a downward sloping channel. Can also call it a bullish flag pattern for a target of 1035. Sneh, I'll be a buyer here with a stop loss at 945 on the downside. The second is Max Health. Now this is one stock which is clearly being on an upward trajectory and continues to make higher highs and higher lows. A fresh breakout from a downward sloping channel trend line too. So Max Health for me is the second recommendation, buy recommendation for a target of 1275 on the upside with a stop loss at 1140 on the downside.
Right. Okay. Those are some interesting ideas to play with. Just looking at what else is moving in the market, and it's pretty much status quo. We've definitely cooled off a little bit from the top of the day, but I don't think that headline number of 25,100 should be any reason to complain. About 100 points gain is pretty much what we're closing the day with. And yes, financials all the way throughout and across the board is where you're seeing the strength, be it Jio Financials, be it pure play banks, NBFCs like Bajaj Finance, gold financiers, some of the stock market plays as well. All of it is what's going strong. On the flip side, though, ICICI Bank has been a little bit tempered today. Like I said, Tata Steel, Bharti, M&M, HDFC Bank, they're in a little bit of a consolidation mode, but it's the sector rotation which is really at play. The underperformers, along with financials, they are the ones which are actually holding out. And Amnish, we were speaking earlier with an expert as well. If you had to go contra in this market, what would it be? Would it be staples? Or would you say IT perhaps could be the best bet, given that seems like, there could be some resolution and a positive one at that to tariffs perhaps?
Aisha, if you ask me, I will not be too keen to go for contras. Okay. You see, as far as consumption space is concerned, we are not negative on the same. Okay. But the consumption basket is changing. So if you ask me if I will go for consumption stocks, which will include staple, which will include discretionary, which will include travel and others, the answer is yes. But will I go significantly overweight on pure staple names? The answer is no. Because many of these are large companies, the growth rates can at best be, you can say, mid to high single digit. Many of them are trading at 40 times, 45 times, 50 times, or even more. So there is very little room for re-rating, and I don't see a possibility that many of these companies will maybe a quarter in between due to base that they can start growing in double digits. So when it comes to playing the contra, one should look at the broader consumption basket rather than looking at pure FMCG or staple companies. That is one. Now, when it comes to, say, IT services, like, for example, people usually say that your P multiples are attractive, dividend deals are there. Okay, so relative to many of these staple stocks, yes, the dividend deals will be superior, P multiples are lower. But if you exclude some phases in, say, 10, 15 years, barring a few stocks which have been clear outperformers, otherwise, I think the growth rates there have also not been that great. Now, if you want to play pure contra, pure value, one can go and buy the IT stocks. But again, these are, you can say, these are global stocks. It is not a function of what happens in India. It's a function of how the various, you can say, trade negotiations at the various levels across the globe happen, how the global economy picks up, how the various geopolitical situation, which is now very volatile across the globe, that pans out. And today there is no clarity on all these things. So given this backdrop, if I want to say do some allocation to, you can say, IT services purely because of valuations and dividend deals, then I can do. But will I try to pick them up as a growth stock or a pure contract to generate wealth? At least I am not in the favor of that.
Appreciate that view coming in. Before we start wrapping, time for an ET Now exclusive. The government could revise the premium of third-party motor insurance by 5 to 12% soon. And sources tell us that the final IRDAI proposal has been sent to the Road Ministry. Anurag Shah is joining us with all those details. Anurag.
Government is all set to revise motor third-party insurance premium soon, and as per our sources, this revision will be 5 to 12% across the various segment. Insurance regulator IRD has sent proposal last week for the revision, and this will be a major revision after a gap of 5 years. Insurance industry is demanding for a upward revision from very long, because as per insurance industry, they are facing pressure due to inflation and rising motor claims. So they were demanding urgent hike by 20%, but the government is considering increase of 5 to 12% across the various segment. Motor third party insurance is a mandatory insurance for all vehicle running on road as per the Motor Vehicle Act, and in insurance industry, for the non-life insurance industry, it contribute around 19% of their total premium. So it will be a positive development for insurance companies like ICICI Lombard, New India Assurance and Go Digit. But on the other side, consumers will be paying more for their renewals, or they are going to buy new vehicles going ahead.
Okay, so that's on third-party insurance. We'll start wrapping up for the day. And before we have Ashesha join us, let's just highlight what's been happening in the market today. It's been an overall steady day coming in for financials. Other stocks have done very well in today's trading session, the likes of Hero Moto, Power Grid. Kunal, quick take on what we can expect the market to be like tomorrow?
Yeah, I think we can expect the markets to come back and at least show some signs of positivity further. I would probably expect the Nifty to at least come back, say, gradually during the remainder of the week towards 25,250 mark, and potentially another 250 to 500 points added to the Bank Nifty. So I think the move now over the next couple of days should be a little bit more gradual, but I think it should be more consistent on the direction on the upside.
Okay, so that's the take on where we can expect the market action to be like tomorrow. But let's wrap up today's trading session. I'm going to hand it over to my colleague Ashesha, who's here with a roundup of today. Ashesha.
Well, yes, Nehi, another day and another strong ending for the Indian markets. Although we are ending slightly off the highest point of the day, but despite that, Nifty holding on to gains of over 100 points above that 25,000 mark. Remember, after a strong bumper rally that we saw on Friday, the trend continued in today's trading session as well. Let's also bring up Nifty Bank for you on your screens. That one was up 800 points on Friday, up another 260 odd points in today's trading session, ending near that 56,830 odd mark. Broader markets are also performing well in today's trading session. Nifty Small and Mid Cap Index should also come up for you on your screens. Nifty Mid Cap Index up over 1%, Small Cap Index up in excess of 1.5%. Let's also put the spotlight on individual sectors that were in focus today. In fact, let's put the spotlight on PSU Banking Index. This was the biggest sectoral gainer in today's trading session. We had Bank of Maharashtra, which was up a solid 3.5% in trade today. PSU Bank Index up 1.5%. We had Bank of Maharashtra up 3.5%, Indian Bank, Bank of India, all of these amongst the top gainers from the Nifty PSU banking index. On the losing side though, we had real estate sectors which were under pressure today. Remember, this was the biggest sectoral gainer on Friday after we had that Reserve Bank of India outcome of rate cut. But this sector saw a little bit of profit booking in trade today. Nifty Realty Index down 0.2%. We had Brigade Enterprises, Sobha, Lodha or Macrotech Developers, all of them ending with marginal amount of cuts in today's trading session. In terms of other newsmakers in trade, let's also put the spotlight on gold financiers because Muthoot Finance and Manappuram Finance continue to be in focus today for the second consecutive session. Manappuram Finance up 7%. Remember, the stock was trading at lifetime highs, followed by Muthoot Finance. That stock was also up nearly 4%. We had some important commentary that came in from the management of Hindustan Zinc, where they said that silver prices are expected to go higher from here on, and they are looking to double their capacity of silver production over the next 5 years. Hindustan Zinc up nearly 5%. Kalpataru projects on the back of some new order wins, where the company said that they've won orders worth 3,800 crores. And Supros after Tata Motors rolled out new heavy trucks with AC driver cabin. So some news coming in over here. This stock was also up 5%. But all in all, turned out to be a good day for Indian markets after the bumper uptick that we saw on Friday. The trend continued in today's trading session. Nifty ending well above that 25,100 mark. But that's all the time we have on this edition of the show. But don't go anywhere. Stay tuned to ET Now.